When should you begin to invest in real estate? When you're ready. What's a good time to invest in real estate? As soon as possible. A lot of people play the market, and you may hear that that is like gambling. A true investor will invest at every phase of a business cycle. So it doesn't matter if it's a trough or if it's expanding, it's a peak. What happens is that during that, you understand that you're involved in a business, right? You're not just playing the market to try to get huge gains in appreciation. You have a longer term goal. And so that's what I would discuss today is what is the game plan that I would follow if I were to go ahead and work with you, or if I was going to go ahead and invest in myself. My thoughts have changed over time as I have gotten experience in education and seen businesses fail and succeed. And I've seen a few cycles now. And what I think now is that you really need to understand who it is that you're going to cater to. And that means, are you going to have a clientele? Are you going to have renters? And that'll answer quickly where it is that you should invest. And that will be different for everyone. So I'll give you this example. If you were going to go ahead and go into a town that was just a normal town, right? Had schools, had youth events, had adult clubs. It was just a tight-knit town, kind of like where I grew up in San Jose, California, in the Almaden Valley, where there's a lot of residential, few dense living communities. But there's those businesses that support the local, and business needs cash flow, and it needs predictable cash flow. So if you can get close to an idea of how much cash flow you need, then that might be the best place to start. And I think that above all, people need to be safe. They need shelter, and they need food. And those are the basics right there. So for me, you gotta have something to eat, and people are constantly eating. If you start off with cash flow coming from food, you're breaking into a business that's very competitive. Why should someone choose your restaurant over another? At the same time, you're in the food business, so you have something to eat. Shelter is a steady source of income. You will be reliant upon what others are bringing home with regards to their pay, and you're at the mercy of their employers or their own business, and you need to prepare for that. So if the idea is that you're going to invest in an expansion phase, the definition of that has totally changed over these past few years. It's lasted a little bit longer than it normally does, and there really is no end in sight to when this expansion phase is going to go down. The buyer purchasing power is strong. Markets are different. I'm licensed in California, Florida, and New York. I focus on LA, Miami, and New York City. And there's huge inventory in New York City, Manhattan specifically, where I focus. There's huge inventory in Miami, and then throughout California. And I focus on LA, it's pretty tight inventory. So seller market and buyer markets. So when is the right time for you to go in, and where do you go in at? That's where you need to go ahead and get the assistance from a lender, a financial planner, your accountant. You need to put together a clear plan of when to enter and when to exit, or if you do, and how to take advantage of not exit and using 1031 exchanges or protecting your assets with trusts. And so my licensing only allows me to speak on the matters of real estate, and I can direct you to those people that would assist. So being that you would be involved in investing in properties, you're going to have to understand income statements, balance sheets, and cash flow statements. And with that, that's financial management. And to me, I would use all the financial management tools regardless. And what I would do would be, I would live very closely to an area where I could also have a restaurant or a grocery store, a market, coffee shop, something like that, where I could literally walk a couple of blocks to my shop, or in some instances I could just walk down a flight of stairs to my shop. So I would have cash flow and a place to live quickly. My business then would expand through ancillary businesses. So I would replicate what I've done for myself first, and I would likely hire somebody that needs a place to live, rent them out one of my units that would be in the same building or a room within my household, or a house very close to mine on the same street, across the street, next door preferably. And then I would give them a job, right? And I would work payment schedules, I would pay them, I would enrich their life, right? I would provide them other services, whether it's gym and healthcare and dental care. I would connect them to my community to build loyalty, right? So as we go ahead and talk about personal loyalty, carries over into business. You have a business now, it's brand loyalty. And through that, you have someone that is going to represent your business, and it's going to go ahead and help you fill a void of needing a tenant. And in treating them well in both respects, they're going to be a great marketer for your overall business and your life. As a business owner, they would say, my manager, the owner of the business, treats me well. I also rent a space from them, and I have my privacy, and they provide me other services that I need in my daily life. So that's where ancillary businesses come in. The more businesses that I can fill into my portfolio that would meet the needs of a normal person, then I'm capturing more and more revenues based on life needs of individuals. And with that business model right there, that's how it grows, right? If I had a house, for example, and I didn't want anybody to live with me, but I had businesses and I knew how much they were making and what kind of lifestyle that they would be able to live with how much they make, then it would be an open discussion at first of have these rooms, let's call it 3, and you're okay to have a roommate and they're going to work in one of my other businesses. And so what you're building is a team in those 3 rooms in that other house that's very close by to my main residence. You'd be building a team for your future business. So you would know where they are, what they're doing, how they're carrying on in their lives, what their goals are for life, and you're building a strong knit business organization, and you're building a community, and you begin to offer them more incentives, maybe continued education, because what better person to help you than someone that's been working for you since they were a younger person or for many years, and they want to continue their education, and you pay for their education, and you retain them as employees that become partners in your business. So for me, the ancillary businesses is the most dynamic addition to how I used to view investing. I would no longer say, let's invest in, we'll talk about residential properties. Let's invest in a residential property on one side of a town, and then a residential property on another side of a town. And then let's pick another town, right, an adjacent town, and try a couple of properties over there. It's just not what I would advise anymore. What I'd advise would be to create that close-knit community, provide those ancillary businesses, incorporate family, friends, and employees, friends, and family to get involved to grow that community. And then that's how it's going to grow. And that would be my business model suggestion for anybody that's looking to get into investment. When we talk about leveraging or stretching money and good debt and bad debt, those are conversations, again, that a person that wants to get into investing should understand thoroughly. It's not a quick conversation. It's something that has an impact on how you will be able to do business today and how you will be able to do business in the future. For example, if you feel that the market is in an expansion phase, and 1 year you buy one property and you wait 18 months to 2 years and you realize that you have accumulated a huge amount of equity and it's continuing to grow because you're in the expansion phase, and you leverage some of that equity, you're restructuring that loan, and then you're creating one, maybe two other loans because you're going to get involved with 1 to 2 more other properties. And the cycle continues for a few years. And maybe after 5 years, 10 years, maybe you have 5 to 15 properties off leveraging money from your initial investment. So during that time, you will likely see competitive pricing in the rental space, where a leasee is going to be paying top dollar. They're in an expansion phase, markets are tight, it's a seller's market, so rents are going up because people need to work, they need to live somewhere, and there you have it. That's the opportune time to be able to build a solid account of reserves for when the market goes down. As we begin to experience the recession, pricing will decline as well. So rents will go down, people will begin to lose their jobs, payments will become inconsistent. And so everything that an investor gains during the expansion phase into the peak phase needs to be set aside in order to maintain control of their portfolio during the recession and during the trough. This is critical, where an investor could find themselves coming out of pocket a large amount of money, and they just got uncomfortable and they sell off during the recession period into the trough period. They're just tired of coming out of pocket, even though they understood when getting into this that this time was going to come. What does that mean? What that means was they didn't truly understand what they were getting themselves into. If you have a 20-year goal of investing in real estate, and after that 20 years, you're cashing out. No matter what the cycle is, you're cashing out. So that means that you would have reserve money because you ran it like a business, and you would either have equity accumulated through large appreciation, or you may be losing on some properties. But in the end, throughout that investing, throughout all the different periods of the business cycle, you're going to have net profits when you sell off the entire portfolio at once, or you pick and choose which one it's going to be based on your needs. Do you need a lump sum of cash at that time, or do you need continued cash flow at the end of that 20-year period? So goals are one thing. Prioritizing how your business integrates how your business integrates into your life as you maintain your status as an individual investor, or if your family grows, those needs and wants are going to change, and it's good to forecast expenditures based on that as well. Otherwise, an investor is just playing the market, just in the moment right now, right? And I know the conversation is difficult for most to go like, how can you predict the future? And it's true. All we can do is do the research, and we can make our informed decisions. It's all speculation. We really have no control over the immediate economy or the politics or local regulations that would affect our businesses or our lives. But we have to do our best. We have to put something out there that is going to say, if this goes right, this is it. But in return, if this what happens, if I see a 40 to 60% loss in asset value, what do my payments look like then? If rates change, what do my payments look like then? And it's important to go through that scenario at different price points. Where borrowing rates were closing in on over 20% a few decades ago, to where we're at historical lows now, with huge amount of national debt, with huge amounts of cash internationally and in this country, waiting for what, right? If you don't put your money to work, inflation will devalue your dollar. So put that cash to work and let other people pay you for the lifestyle that you've built for them. So if I change to a different investment strategy, it still applies, but it's just going to be a different clientele. If it's a vacation clientele and I decide to move to a vacation community, right? A transient community, a hospitality community, I'm going to do the exact same thing. I'm going to find that place to live. I'm going to find that place to eat. And they're going to be close to each other. And I'm going to invest in those businesses. And then I'm going to provide myself some time, and I'm going to get an employee. And with getting that employee, they're going to need a place to live. And there's my next investment, another place for my employees to live. and then the cycle continues. And tourism guests are going to have a little bit different. So the ability to package goods and services through your affiliates that you meet in the local communities, by packaging the service and products of your affiliates in the local community, could end up being a huge cash flow source for your business and your affiliates' business. By anticipating what your guests are going to need, then you've already beat out the unorganized competition. And it's similar to, I come from the hospitality background, so pizzas at 16. And by the time I graduated, I was waiting tables. And so by delivering good service is through recognition. Recognition meaning as you have regulars come in, you get a pretty good idea of exactly what they want, when they want it, how they want to be served, and how they want to be engaged during their visit to the establishment. So this all applies to investing and building an ancillary business portfolio for real estate investment. This is the way I would do it, and it would go all the way up the line. So my education carried me into hospitality management for the University of Nevada, Las Vegas, and Cornell. And it goes into hotels, and the most dynamic understanding of it was the casino resort, where you have a stay, you stay there, and everything you need during that stay is under the same roof. There's no reason to go anywhere. You just want to be there, right? And that's up to the organization that operates that casino resort to capture your dollars by delivering great products and services that would make you not want to go anywhere else. If you wanted to go somewhere else to do something, then they failed in the delivery of their products and services. What's the reason they stayed in your hotel room, right? Why didn't they go to that other place to stay at the other people's hotel room if they wanted one of their products and services? So that's the conversation right there.